my YouTube channel. This is the Captain Ngala FX, your number one mentor, the Captain Ngala mwenyewe, as you know that. Today is another video we want to talk about, and this is a very important video. And I told you that every time the market approaches a resistance zone or a support zone, when it approaches the support zone, which is the demand zone, the market will always tend to buy. When the market always approaches the resistance zone, which is the supply zone, the market will always tend to sell. Now, today we are going to talk about how to trade what we call a double top, a possible double top, then a double top with a neckline. This is it. This thing is very simple. Very simple. Now, remember we have a difference between double top, possible double top, and a double top with a neckline. That is very important for you to know. A possible double top. What is a double top? Let us check out. A double top is something like this. Let me say the market was uptrending, hit the resistance zone, sells up to next support zone, then goes back, hit the resistance zone again, tries to sell back, then you will get what we call a double top. A double top means that the market must be at the same key zones, which means the market must be formed at the same key zones, at these key zones. You can see this, at these key zones. That is a double top. And I told you that for you to trade double top, you have to look at things like, the first thing for you to trade double top, you look for what we call actualization of the support zone, of the resistance zone, because remember, once the market forms a double top, which means the market has reacted to the resistance zone. That's why we have what we call actualization of the resistance zone for the market to be considered a sell. And I already did a video on how support zone, resistance zone is created, actualized, and violated. We had done a video on the same. Now, the next thing to look at is to look at the movement, which means the market must sell up to half, up to half the distance covered from the supply zone, which is the resistance zone, to the previous demand zone, which is the support zone, which means you have put these things into place. And I told you that how is a resistance zone being actualized? And this one I had talked about in a certain video, which is there. If you haven't watched that video, kindly go and watch it. This is how a resistance zone is always being actualized. Let me say there are two candles forming at a resistance zone for it to be called a resistance zone. I had told you that a resistance zone is created when a green candle forms at a key zone followed by a red candle. Now, how is this zone actualized? And I told you that the next candle which is formed should be a bearish engulfing to the previous bearish candle which has been formed, which means for you to confirm this is a bearish engulfing candle, it must engulf this candle with half the distance, which means the distance moved by the previous candle must be half that distance for us to say that this is an actualized resistance zone. If the market has not engulfed the previous candle with half which means you are going to wait for the next candle to be printed to engulf the previous candle, not only with half, but as long as it has engulfed it, that one is now confirmed resistance zone, which means once this actualization has been done, you have to wait for this candle to be fully formed. Fully formed, it means that when the candle we were looking at the candle at the 4 hour, which means this candle must be printed and fully formed at the 4 hour, which means it has to cover the distance of a 4 hour. It is always seen when you're using trading view, you will always see the distance which is remaining for this market to the time which is remaining for this market, this candle to be fully formed. What is the importance of this? This will help you to avoid trading a fake market, because this candle might cheat you that it has engulfed this, but you will find that this candle has not been fully formed, then it will reverse and form another bullish candle here, and creating what we call a current support zone. For you to avoid that, this candle must be fully formed, which means those time frame, you have to check that that time frame is complete and now that candle has been fully formed. That one is how to identify the actualization of a resistance zone for the market to go down. I hope everyone understands that. If you haven't understood it, go to my previous video on the support and resistance zone, you will understand it. Now, after the actualization, what do you check? Come here with the ruler of the data range. If you're using trading view, measure the distance from the current resistance zone up to this distance, up to the previous demand zone, which is somewhere here. Let me say this demand zone was somewhere here. Yes. Now your half will be here, which means how do you trade that market? You only trade that market up to the half, which means after the actualization, your take profits is only up to the half. Because when you target more than half, mark this distance here. If you target more than half, there's a possibility that this market will come here, hit this resistance zone, then goes back to the previous demand zone, and come here and sweeps all your stop losses, and you will get yourself forming a liquidity, part of the liquidity in the market. To avoid that, on possible double top, you have to only sell that market up to half of the distance covered. For you to sell the market up to the previous demand zone, it has to break that half, retest it, and sell up to the same distance. Or you cannot wait for retest. Once the market has broken that market, and remember to, the market can never be broken with a wick. The market will always be broken with a candle, full candle. Now avoid trading fake out, because if the market will not be broken with a full candle, which means you are going to trade what we call a fake out, fake breakout, and the market will come here, sweep your stop losses, then goes to your direction, which means you have to wait for this market to break, not with the wick. Don't trade a market which has been broken with a wick. Trade a market which has broken uh, trade a market which has broken with a full body, for you to avoid trade fake breakout. Now wait, you can, after actualization of the resistance zone, just sell the market to the half of that distance to be covered. That is how to trade double top. How do you trade possible double top, and what is a possible double top? This is the possible double top. Let me say the market was moving this way. Market comes here, hit this zone, and start selling. This is it. You can see this market, they are forming at different zones, which means they are forming at different levels. The resistance zones are forming at different levels. This is the first level, and this is the second level, and the distance to be covered is somewhere here. As you can see, the distance to be covered is somewhere here, which means For you to trade this market, don't look at the actualization of this zone. Very simple. Come here. If the market is a possible double top, come here with your ruler, data range, measure from the highest resistance zone to the previous demand zone, measure half of that distance. Now, this is the rule, and take this home because no one will train you this in forex trading. You will never get this mentorship. Check this. For you to trade a possible double top, the market must break half of that distance. Then this market, you wait for this market to retest, because after breaking half, the market will retest. Once the market retests, you sell up to the next previous demand zone, which means when you are trading a possible double top, the market must break half for you to sell up to down. Whenever the market breaks half of that distance, this one it changes from possible double top to an actualized double top. It changes from possible double top to an actualized double top. Now, remember, you will be trading now a double top once the market breaks this half. When the market breaks the half, you are now sure that the market is going up to the next demand zone. That is how to trade possible double top without any fear or favor. Where is your stop loss? Your stop loss must be above 100 pips when you are in 4 hour or 1 hour, above the uh, above the half of this zone with 100 pips or 100 pips when you are trading on 4 hour. But when you are trading on daily time frame, it must be between 200 to 500 pips. When you are trading on monthly, it increases. For you to avoid being hit with the market, for the market to start going down, because the market can come uh, react to this zone, which means it retests to past this, then goes to your direction. That is how to trade possible double top, which is very simple, direct, and secured. The next thing we are going to talk about is how to trade a double top with a neckline. A double top with a neckline. Sometimes my market forms this, which means the market will always form a double top, then the market will always react to this zone, which is the resistance zone, then starts selling, hits back, forms a double top, and goes trying to sell to the neckline. Now what you do, you will come here, uh, uh, mark the neckline, name it, you can call it out, like this is my neckline. You just indicate it when you're doing your Sunday analysis, indicate wait for neckline break. Yes, you indicate that wait for neckline break. Then you mark the previous demand zone. Now, how do you trade this market? How do you trade this market? This is it. This is how to trade this market. You wait for the market to break the neckline, retest it, and goes to your previous demand zone. Some markets will never retest. Now, for you to be safe, for you to be safe without waiting for the market to retest, put your stop loss above the resistance zone. That one you will be very safe. But remember, if this market, if you put your stop loss above the neckline, this market can come here, retest before the resistance zone, and sweeps all your stop loss which was here, then goes to their direction. Now, for you to be safe when you are trading a double top with a neckline, stop loss must be above the resistance zone for you to be very safe. Stop loss must be above the resistance zone. Then where are you targeting? Once it breaks the neckline, the market will always go to the previous demand zone, which is the support zone. Now this is what you do. Just check whether that market has broken with the full body. As I told you, a break with a wick is not considered a break. Wait for the market to break with the full body. Wait for the market to break with the full body like this for you to sell up to the next previous resistance demand zone. If the market, and you wait for the market to be fully formed, I've told you, if the market is on a 4-hour time frame, it must form, or it must form that given market. It must form, that candle must be fully formed by completing those 4 hours which is stipulated. Now you will confirm with this zone that that market has formed, has reached 4 hour, and now the next candle is being printed. Immediately the next candle starts being printed, we just enter sell, and stop loss put above above the demand, above the supply zone, which is the resistance zone, and you will be safe. That is very simple, and this mentorship you will never find it anywhere. You can only find it at the Captain Kala FX mentorship, which means you can also DM me for mentorship. My WhatsApp number is there. Tel number also, I will be pinning my tel number here. You DM me for the mentorship. For online classes from July, I am charging 5,000 Kenyan shillings, which is $50. If you want offline classes with face to face is 20,000 per month. 5K for online classes per month, 20,000 for offline classes per month. That is it. WhatsApp me that number. I will give you full mentorship. Signal is free. DM me via WhatsApp, or you can call me. Then we will connect. I give you the guideline. Then, guys, now let us see the market in the real life. Let us see how can we trade those given market. This is the XY. Let us check on NZUSD, a signal I had already given to my team. NZUSD, yes. I don't know if we did the analysis on NZUSD. I don't know. Did we do analysis on the NZUSD? Yes, we can do this. This is it. You can check this. If you are very keen, you will check that this is a double top. Yes, that is nice. You can indicate it with the yellow for it to be seen. Now you will come here, write it very well. Guys, forex is very easy, but you are the people complicating things because you want to trade without mentorship. That is your problem. Double top. If you come in the market to trade without mentorship, that is your problem. This is a double top, and it is a confirmed double top, as you can see, which means this is the resistance zone at that given market. Then the supply zone, which the demand zone is here, which is the support zone. You can even call it out for a good indication. Come here, call it out. This is called a support zone. Support zone. This is now a support zone. How are you going to trade this market? How are you going to trade this market? Measure the distance from the double top. Sorry. Measure the distance from double top up to here. Then measure half of that. And I told you that this is it. Market, only half is guaranteed. Only half is guaranteed. And I told you that. How do you put your stop loss? Very simple. The Captain Ghana never lies. Come here, measure 100 pips above the resistance zone. It's somewhere here. The market will never come to your zone. Put your stop loss there. Somebody who entered. This one was actualization of the resistance zone. Somebody entered here. The market came here. Some people thought that, oh, this market is now buying. The market is not buying. Because you are sure about the market, then the market immediately starts going to your direction, because the market will always form a zigzag up to the half. Immediately the market hits half, starts buying again. Now for you to sell this market more, because the market has hit your take profit, and I traded this with my team, has hit your profit, you wait for half of this one to be broken, then you sell up to the next zone, which means for us we are waiting for this zone to be broken, NZD to break this zone. Once NZD breaks this zone, we are going to sell up to here. And I just told you that these are not breakouts. These are fake breakouts. Don't ever see a market breaking a zone with a wick. That is never a breakout of a zone. Get it from me. When you practice these simple things, you are going to have very easy time in market analysis. Now, wait for the market to break this zone. Wait for the market to break this zone for you to enter the market fully. That is very simple as that. That one is double top. I don't know kama we can get some possible double top in any market. Let us confirm. This is also a market we analyzed, but it has not done what we wanted. Let me check, because we are talking about double top only. We're talking about double top on NZD. NZD CHF is the same thing with NZD USD. You can confirm the same as NZD CHF. Yes, I want you to see this. NZD CHF has done what we wanted. Confirm this. This is a double top. Confirmed double top. Yes. Then what is the previous zone? Was somewhere here. This one was the demand zone. Then how did you trade this? You come here with the data range, measure the distance up to down there, measure half of that distance, which is here. Yes, remove this. Sell up to half. You can remember the market now has sold up to half, because this market was actualized here, came here, sold up to half, then broke that half. This is now considered a breakout. Retested, goes up to the next demand zone. That is very simple as that. And once you have analyzed the market, don't be somebody called a forex addict. You are ever in your chart, closing trades, opening new position, because you are trading with emotions. Stop trading with emotions. Forex is very simple. If the market hasn't hit your sell and TP, kindly be patient. The market will hit, or will definitely hit your TP for sure, because your analysis is correct. Because remember, I told you that stop loss must be above the resistance zone. Stop loss must be above the resistance zone. That is it. Let me confirm kama there is a pair which formed a possible double top. Guys will be doing top down analysis. This one is a market we hit TP1 and the market started going up. We are waiting for the market to hit TP2, then TP3. That one is USD card, and that one is pure analysis on USD card. Gold hit our TP1, as you can see, broke this on TP1, started going up. We are waiting for the break of this one, and I told you that this is a fake breakout. Don't trade this. Lazima break in a full body. It has to break with a full body like this for you to start selling gold without a retest. Stop loss must be above this breakout. That is it. I don't know, possible double top tutakuja, will come and see one in the meantime. Guys, that one was my time. If you want mentorship, and I'm promising you, with me I've been hitting the market hard. Someone can confirm with me. Last week I've been withdrawing this market for a very long time. You can confirm. I've been withdrawing cash from this given market. This is my email. I'm using Exam as a broker. You can confirm. I've been withdrawing because my analysis are very accurate. This one was a 50 USD. I withdrew on Friday, as you can confirm that, and then that one was a withdrawal on Friday, which was yesterday. This is another 222 USD on withdrawn on Wednesday, which means on that week I've made 28 USD. That is about 280 USD. That is about 40k in Kenyan shillings now. That is a lot of money. And you can confirm again. The other week, I'm withdrawing weekly. Very simple. Don't. The other week I withdrew 100 USD. we are hitting the market. Don't go big before you analyze, or before uh, uh, successful deposit. That one was a deposit. Let me confirm. Withdrawal is this 70 USD. The same month. Hey, we are hitting the market hard, bro. Uh, uh, there are very many withdrawals. I always withdraw weekly, like twice or thrice in a week, and that is it. Now, don't waste your time trading what you don't know. Join mentorship, will train you. I'm the only person that the market, you can confirm with me. I'm the only person that treats the market. Uh, this is it. This is my Telegram channel. You can confirm. I always post everything I trade here. Like last week, we hit. This is a real account, and you have seen the withdrawals. Let me confirm with you. This is a 250 US dollars made on USD JPY and GJ. Very simple as that. Don't waste time in very many things, and join my mentorship. Thank you, and that one was my time.